Welcome back to the deep dive. Today we're embarking on a really crucial exploration. It's about something that, well, it impacts almost everything in the global economy. We're talking about the U.S. dollar index, the DXY.
That's right.
Now, I often think of the DXY as a sort of global report card for the dollar. It measures its strength against a basket of other big world currencies.
It's a pretty good analogy, actually.
And right now, looking at the sources we've gathered, well, that report card isn't looking particularly great. Not stellar at all. Okay, so let's unpack this. Our mission today is to really explore the forces that seem to be signaling a potential, maybe even a significant nosedive for the U.S. dollar.
Yeah, and what's fascinating here is just how many different threads seem to be coming together. You've got the technical stuff, the market charts, but then also these big geopolitical shifts, fundamental economic factors. They're not just concerning on their own, but they're powerfully converging. It's like they're all telling this one very important story. It paints a complex picture, definitely. And our goal is to help you understand, each piece and how they might be combining at this potential turning point for the dollar.
Absolutely. So talking about these threads, let's maybe start with the most immediate evidence. The visual stuff. What the charts themselves are, well, what our sources say, they're almost screaming.
Okay.
They highlight that the DXY, whether you look at it daily, weekly, or even monthly, it's pretty consistently sending the same message.
Yeah.
The dollar is losing strength, demonstrably.
Mm-hmm.
And this doesn't look like just a quick dip or a minor correction. The patterns seem to hint at something, I don't know, more fundamental.
Yeah. That's exactly right. If we zoom in on the technical analysis from our sources, we see the DXY price has been stuck for several weeks now. It's in this kind of horizontal range, like a stalemate almost.
Stuck where, exactly?
Specifically, it's been bouncing between 98.9 on the high side and 97.400 on the low side. And this range has basically held firm since what analysts call the 2025 financial year's low price was formed.
Okay, that sounds important. What does that low price signify?
Well, it's not just a number. It acts as a really critical support level that was set early in the financial year. Think of it like a line in the sand. If it breaks below that convincingly, it signals a pretty big shift in how the market feels.
Right.
So this sideways movement, this consolidation, it shows there isn't really strong conviction from buyers to push higher or sellers to push lower, for that matter. It's an equilibrium. But technical analysts often see this kind of thing as a serious warning sign before a big move.
A warning sign.
Yeah, and the indicators, in this specific case, they're subtly pointing down. It suggests that when the market finally does break out of this range, it's, well, more likely to break to the downside. Which leads to the question, right? What happens when a price gets stuck like this for so long, especially with these kinds of underlying signals? It often means there's pent-up energy, ready to unleash a big move. And right now, that momentum seems to lean towards depreciation, a weaker dollar.
Okay, and speaking of a downside move, the analysis we're seeing points to a potential drop, a significant one. It could land the DXY right in what they call a crucial demand zone, somewhere around the 92 to 93,000 level.
Exactly, the demand zone.
Now, for anyone less familiar with that term, maybe think of it like a big clearance sale at your favorite store.
Ah, yeah, that's one way to put it.
It's a price level that's so low that buyers who are maybe just watching, they suddenly get really interested. They jump in, hoping for a bargain.
Right. That surge of buying could theoretically cause the price to bounce back up. For market pros, though, it's more than just a low price. It's an area where historically a lot of buying interest has shown up. You often see trading volume pick up there. It creates a sort of floor.
But to even get down there,
Yeah.
we'd first need to see a pretty big sustained fall in the dollar's value.
A substantial decline. Absolutely.
This isn't just about lines on a chart, is it? That's what's really fascinating here, according to our sources. These technical warnings seem to be echoed by some really big real-world shifts, seismic shifts even. And here's where it gets really interesting, because the chart moves might just be reflecting these much deeper pressures. So if the charts are flashing these warnings, what are the real-world reasons our sources point to? Why is the dollar under this kind of pressure?
Good question. Let's move beyond the technicals.
Yeah, let's dive into those serious real-world factors. And first up, maybe the elephant in the room, the AI boom.
Ah, yes.
Or maybe, as our sources provocatively ask, is it just an AI bubble?
It's a comparison that keeps coming up in the sources. They draw this, well, unsettling parallel to the dot-com bubble back in the late
I
90s.
remember that. Everyone throwing money at anything with .com.
Exactly. Valuations got completely disconnected from reality, from actual earnings or profits, before it all came crashing down.
Right.
The worry now, as highlighted in our sources, is that similar speculative behavior might be happening with AI, hinting at another potential collapse.
But AI is revolutionary tech, isn't it?
Oh, undeniably. Huge potential. But the stock prices of many AI companies, they've skyrocketed in a really short time, far beyond their actual earnings, sometimes even beyond their, near-term profitability projections. It's the speed and scale of the investment that raises eyebrows.
Okay.
So if this bubble, quote unquote, were to pop, the ripple effects could seriously shake the U.S. economy. Investment portfolios, consumer confidence, everything. And that, in turn, would likely weaken the dollar significantly, hit its perceived stability. And what's even more intriguing, our sources mention these whispers that the U.S. government might be trying to get ahead of this, trying to resolve the potential issue.
Resolve it how?
Well, the suggestions mentioned include using Bitcoin or other crypto assets, not just as an alternative, but maybe as a tool, a mechanism to achieve what the sources call a great rest of the U.S. financial health.
A great rest. That sounds radical. What does that even mean?
It does sound radical. It points towards potentially fundamentally reevaluating, maybe re-anchoring the national balance sheet, using digital assets somehow to manage debt or redefine value. Looking at the bigger picture, it just underlines how crucial the perceived stability and, the solid valuation of the underlying U.S. economy are for the dollar's strength. If the foundation looks shaky or built on too much speculation, international investors get nervous. Confidence drops.
That's, a really interesting layer to think about for U.S. finance. But it's not just internal stuff, right? The world itself seems to be actively de-dollarizing, as the sources put it.
That's a huge factor.
For decades, we've had the petrodollar system, established way back, I think, the 70s.
That's right, mid-70s.
And it basically meant oil, the lifeblood of the global economy, was priced and sold only in U.S. dollars.
Correct.
Which essentially forced countries everywhere to hold massive amounts of dollars just to buy oil, kept demand high, cemented the dollar as the world's main reserve currency.
And that system, which has been the bedrock of global finance for nearly 50 years, it's now fundamentally shifting.
How so?
What's truly fascinating and really changes the global landscape is the news from earlier this year. Significant reports surfaced suggesting Saudi Arabia didn't renew its long-standing petrodollar agreement with the U.S.
Whoa. That sounds major. Saudi Arabia was key to that system.
Absolutely key. It's like, imagine the world's biggest store suddenly saying, that one credit card we only accepted for decades? Well, now we take everything.
Okay, that puts it in perspective.
Yeah. It's not just some minor admin detail. It's a structural crack in the old system. It opens the door for other currencies in major international trade, especially oil.
And are other countries moving on this?
Definitely. Countries like China, Russia, India, even many in the Middle East, they're already making moves, striking deals to trade in their own currencies. It's like they're slowly but surely chipping away at the dollar's dominance. It's not happening overnight, but the trend is clear and accelerating. It fundamentally changes the demand dynamics for the dollar globally, a clear sign the financial architecture is evolving, and the dollar's unquestioned rule is being, questioned.
And then you add geopolitics into the mix, which always complicates things. Looming threats of trade wars that could speed this whole shift up dramatically, couldn't it?
Oh, absolutely. Geopolitics isn't just noise. It has direct, often immediate economic impacts, especially on currencies. Our sources detail this growing potential for a really fierce global trade war.
Yeah.
They point to specific, very vocal calls from prominent figures.
Like?
Well, they mentioned statements from President Trump, for example, who recently suggested NATO countries should hit China with massive tariffs, like 50%, even 100%.
Wow.
And at the same time, renewed calls to stop buying Russian oil. Now, these aren't just random comments. If actions like that were actually taken, the consequences would be severe, far-reaching.
How so?
You'd likely see immediate global retaliation. Trade routes would get messy, inefficient, and many nations would actively, maybe even urgently, look for ways to trade without the U.S. dollar.
Just to avoid getting caught in the crossfire.
Exactly. To avoid the economic fallout of a U.S.-led trade conflict, and that would inevitably cause demand for the dollar to plummet even further. Its use as a neutral exchange medium would shrink.
Hmm.
It really makes you think about how quickly global alliances and trade habits can just fracture under that kind of intense pressure and what that means for the dollar's status.
And it seems like on top of all these external pressures, there's trouble right here on U.S. soil.
Hmm.
We often say here a country's currency reflects its economic stability, sure, but also its political stability.
Indeed, very much so.
And if a nation looks unstable, the currency usually follows.
That's what our sources are clearly indicating. They describe deep political divisions within the U.S., making international investors frankly nervous. This ongoing uncertainty, you see it in policy gridlocks, social tensions. It makes holding U.S. dollars just feel riskier compared to maybe other assets or currencies perceived as more stable.
Investors hate uncertainty.
They do. They crave predictability. When a major economy shows signs of internal strife, capital tends to look for safer havens.
Yeah.
Our sources even specifically mention how certain jarring events, like the recent assassination of a prominent figure known mostly for political commentary, someone who was, according to the sources, very vocal on topics seen as impacting the U.S. economy and citizens' livelihoods.
Okay.
Events like that, they contribute significantly to this overall climate of investor hesitation, perceived instability.
And just to be clear, we're not endorsing any viewpoint on that event itself, right? We're just reporting how sources say the investment community interprets such things.
Absolutely. It's about impartially reporting how high-profile destabilizing occurrences, regardless of the politics behind them, are viewed globally by people managing money. And while, an extreme outcome like civil war is seen as unlikely by these sources, the ongoing anxieties, the cumulative effect, it's enough to make investors think twice. Erodes confidence in the dollar.
So, okay, we've gone through the technicals, the AI worries, de-dollarization, trade wars, domestic instability. Taking this all in, what's the bottom line for the U.S. dollar? Our sources paint a pretty vivid picture, stark even. They call it a perfect storm.
That's the term they use, yeah. And it fits. It's not just one thing hitting the dollar. It's this powerful convergence, all these factors compounding, creating intense downward pressure.
So, summing it up.
Technically, the dollar looks really weak. The analysis suggests the chance of an even deeper fall is, well, significantly greater than the chance of a strong recovery soon. Fundamentally, you've got the AI market maybe looking shaky, the dollar's global role being actively challenged, trade war threats getting louder, and domestic politics creating uncertainty.
Right.
They're all pushing the same way. It suggests the path of least resistance for the dollar, for now anyway, seems to be down.
Which brings us back to that key level you mentioned, that ultimate test.
Exactly.
As our sources conclude, that 92,000 to 93 T demand zone, that's going to be the moment of truth.
The definitive test.
Will enough buyers finally step in there, save the day, maybe trigger a bounce?
Or
Or will these powerful forces just prove too much? Will the slide continue even further?
only time will tell, really. But for now, as you said, all the signs our sources are analyzing, they're pointing pretty clearly down.
You know, this deep dive, it really hammers home how interconnected everything is
I think
globally.
amazing, isn't it?
Yeah, how lines on a chart link directly to huge global trade deals or even, the political mood inside one country. It's a powerful reminder. So many moving pieces feeding into something as basic as currency strength, which affects everything from big trade down to our daily costs.
And thinking ahead, it does raise an important question for all of us, doesn't it? If the dollar's dominance does continue to fade, if its role as the world's main reserve currency keeps diminishing, what happens next? What broader shifts might we see in global economic power? Could it accelerate the search for totally new financial standards, maybe push towards, I don't know, more digital currencies or maybe different kinds of asset-backed systems worldwide? It feels like a landscape that's really ripe for some major changes, and the implications go way beyond just currency values.
Absolutely. Those are some truly profound questions to chew on, and definitely something we'll be keeping a very close eye on here. Until next time, thank you so much for joining us on this deep dive. Keep that curiosity alive and keep digging deeper into this fascinating, constantly changing world around you.